Okay, well, we've got more market news in a string of tons of market news, but this is kind of an interesting one. And first things first, please like and subscribe. I really appreciate that. I know I don't always ask it on videos, but would love to get some support there. So thank you if you can. Really appreciate it. Let's jump immediately in. We're talking breakups. We're talking breakups of big companies, but I also want to talk about breakups that have happened in the past and how they've tended to go over time. So let's jump right in. We got the news earlier that Johnson & Johnson is going to be split up. Johnson & Johnson, full transparency, is a stock that I own in my portfolio. I'm also curious on what I'm going to do post breakup. So just to be clear, I haven't made a decision there. I'm probably going to hold, though, to be totally fair. Hey, Jeffrey Dad, thanks for joining. So let's kick this off right off the bat. So shares of Johnson & Johnson earlier were up after the company announced it was going to be breaking up into two separate companies. Those two separate companies will be focused on consumer health products on the one hand and pharmaceuticals on the other. Now, what's interesting about this timing, frankly, is the fact that this falls just days after General Electric announced they're going to be doing the same thing. So the reason this is sort of really interesting is it's been done before by these big industrial type companies, but let's get into some of the specific details here. So what we know is, again, they're going to be breaking up consumer health division, which sells tons of things you might be thinking about: bathroom products, baby products, all the standard Band-Aids, et cetera, that you're used to seeing. Whereas they're going to be leaving the other piece of it really focused on, excuse me, pharmaceuticals, medical devices, etc. So it's a big move, and what the reason for this, just to kind of set the stage for why these things happen, right? Because I think it's important to reference this, is quite often when a company that's really big is having trouble understanding why to do this, what the opportunity is, how to continue to grow. What happens over time is as these companies grow through acquisitions and through adding on components of their underlying business, they end up with units that have really strong growth, really big opportunities, and they have other divisions that are really consistent, good payers, good cash flow, good predictable revenues. And I think in this case, that's exactly what Johnson & Johnson is seeing. And this is frankly what GE is seeing as well. I, for one, personally think this makes a lot of sense. Johnson & Johnson is a strong company, pays a great dividend. There's a lot of reasons to think about why we might want to split this up into two pieces. And you know, I'm going to hit you with a couple of quotes here as well. So one thing that we're looking at is that a lot of other big companies are getting better valuations than J&J also. And this is coming directly from the CFO, who essentially added this, right? Quite frankly, it was getting lost within Johnson & Johnson, these opportunities. And he thinks that in terms of pharmaceuticals and medical devices, that was a big prevention area for the spotlight of how they can grow and grow aggressively. And it's really interesting when you think about that, because the reality of it is selling Band-Aids and Listerine and toothpaste and whatever else it might be is not the sexy stuff people want to hear about. It's about what they're solving for. It's about what pharmaceuticals are hitting and rising fast and solving for big problems. So it makes a lot of sense to split these up into two different areas. What I also want to call out was an example that I sort of was involved in as well when it happened, and frankly has been pretty good overall for people who stayed with it. And I want to be clear, of course, that past results are never indicative of any future result. Investing always has huge amounts of risks. And since I don't know your financial situation, cash flow or otherwise, I'm making no recommendations here either. But what I did want to call out is back in 2019, in what was really a pretty similar situation, then the Dow DuPont company actually broke up into three separate spinoffs: Dow, DOW, DuPont de Nemours, DD, and Corteva. Very much a similar reason, frankly, because they had their standard business of manufacturing chemicals and selling them, very, very much expected, very standard things that were getting good cash flow but not growing like crazy. And they had other product lines that were just growing like wild. So when I went today after hearing this news and took a look at those three different stocks now, CTV, DD, and Dow, all three since that time period 2 years ago have actually gone up. Now, that being said, there were definitely some downs and some highs as well. But overall, from then to today, all three have fared better with higher valuations and higher current stock prices than they were when they broke up. So I think, for one, just calling this out with J&J, that this allows two separate companies to focus on what makes them great, focus on the areas and levers they can pull to increase those margins, focus on the areas they can really get in on to extrapolate growth across the company and look for areas to create extensions of that growth as well. So this will be a quick one. I just want to share because I think a lot of people get very nervous. And I heard this earlier too, that like, well, what will happen? Why is this happening? What does this mean for me? I just want to call out that this is actually really, really normal. I actually just this morning, I'm trying to think of how to share this without giving away a ton of information. I got this letter in the mail that Kyndryl is actually being spun off of IBM. So I'm getting shares of that, right? So that we oftentimes see companies doing mergers or acquisitions. Sometimes it's private companies, sometimes it's public. But in this case, we do oftentimes see these spin-outs or these split-ups. And it does happen quite a bit, especially for the very, very large companies as well. So I'll end there on that point. I think that for what I'm going to do, just because I want to be transparent here, I'm going to just hold and not worry about it right now until I get more information on what's happening here. I did this. I'm going to do the same that I did with Dow DuPont. We're going to let this thing play out and see what the positions I can take are going to be. I appreciate also my friend over the Debt Free Dad channel, which you should definitely check out. Rivian versus Tesla. I'm going to just speak to the high level of where I'm at on this right now. I almost can't believe. Well, actually, maybe that's the wrong thing. I can believe, frankly, that Elon is yet again tweeting things that probably are going to get him in trouble, right? The selling the shares, the talking about Rivian in a tweet. I think we're going to see more lawsuits come from this, which is going to be even more issues for Elon personally. I was going to make a whole big video about infrastructure driving large-scale growth in enterprise and manufacturing customers, and I'll probably still do that. But to speak to this right now, when I think about Tesla versus anyone, Rivian or any other company that's out there, the first thing I think about is how are you scaling your infrastructure to go big, to go self-reliant, to go wide and deep and vertically integrate all of those components. I don't know where Tesla's going to be. I don't know where that price is going to get to. I don't even have any idea, frankly, at all of what's going to happen there. But what I know is they have infrastructure in place to source the materials, to build the batteries, to do the installs, to manufacture the cars, to repair the cars, to sell the cars, to charge the cars. And I think that that's a level of infrastructure that's going to be hard for anyone else to come in and compete with. And in a lot of ways, I think about it like a power company. If I want to start a new company, cable, electric, etc., I'm going to have to now license out or pay for access to the cables and wires that are already up there. So in a sense, if anyone else wants to start leveraging that technology that's being grabbed by Tesla, whether that's chips or battery materials or raw materials even below that, they're going to have to figure out a way to do that with a power player in place. So I think probably that's a long answer to say, I think RIVN has a perfectly good chance of being a successful electric car company. I almost wonder, though, if the play is more for them to grow a little bit, create some of that infrastructure, and then get acquired. Maybe not by like a Tesla who already has what they need here, but I wonder if they could fill the gap for, Chevy, Ford, Honda, whoever it might be, who haven't really grabbed a lot of name recognition or brand recognition in the electric space. So, like, for me, there could be a merger arbitrage opportunity. Again, I don't know that that's the case, and I haven't really done enough into the details of what kind of margins they're running, what kind of growth rate they're seeing. I frankly don't know. But to me, from like the hedge fund perspective here or PE perspective, I'm coming at this thing and I'm looking at it like, look, I might be able to take a little bit of chunk of Tesla's business with a really popular name brand and actually a pretty nice looking vehicle too, all things considered. So that's where my head's at there. I'm going to dig in deeper on another video on really infrastructure-based growth and how that's driving Tesla to the valuations it has, and maybe do a comparison there as well. Thanks, man. I appreciate that, Marcus. Anyways, I'll wrap up there at the 9-minute mark. I think J&J is nothing to be concerned about. It makes sense from a breakup perspective. It makes sense from an operational perspective. And then I love this conversation on infrastructure. And maybe it's even one we can talk about and do some compares together on. Everyone watching and going to watch later on, thanks so much. I get a lot of rain out the window. It's actually overpowering my speakers. So I'm going to call it there before you start hearing it. Thanks, everybody. Good investing out there.